The Middle East turmoil threatens the fragile recovery prospects in many of the world's biggest economies. A range of crude oil benchmark prices are perched above $100 a barrel, bringing on fears of crippling inflation before the cost strangles growth. What's more, some analysts warn the higher oil prices will outlive the problems in the Middle East. Here's Philip Lasker.
Global oil markets often jump at shadows, but the Middle East turmoil is much more than that.
I think we need to watch this very carefully in terms of the implications for global growth.
Major oil companies were attempting to allay concerns.
BP does have significant operations in Egypt. They have continued to operate without interruption. Our staff that had left the country is heading back there now, and some of them are already back there. We have had no interruptions with our businesses in the Middle East.
The world's biggest oil producer, Saudi Arabia, attempted to deflect the concern, saying there is an abundant global supply of oil. You wouldn't know it looking at the price. All global oil benchmarks are perched around 2.5-year highs, with the Asia-Pacific region's Tapis crude the most costly. And many industry experts say when the Middle East tensions die down, the oil price won't.
I think a sustainable oil price around $100 for this year is probably well and truly within the realms of possibility.
And those high oil prices helped energy producer Oil Search deliver a 39% jump in profits. It's also expecting high prices to drive revenue this year, despite a cut in production to focus on its Papua New Guinea LNG project. That'll be good for Oil Search, but it won't help what some see as growing supply problems as the developed world recovers and the developing world craves resources.
With commodity markets, when they really get hard up against supply constraints, prices can go parabolic. So picking the top that oil can go to is very difficult. The point is not the level it goes to, but the pain it causes.
And that pain will be widespread.
Given that there's an underlying increase in the oil price, then there would be a flow-on effect through to motor spirits, diesel. In Australia, there's a very, very heavy bias towards diesel for mining and agriculture. And then we've got the situation with jet fuels.
Investors have also been rushing to the safe haven of gold. The Middle East tensions have accelerated the rush, but they don't tell the bigger story.
Gold is probably going to continue to rise. My view is that it's a little bit of an insurance policy. If the world goes back to normal, gold will probably do fairly poorly, but I can't see the world going back to normal anytime soon.
Others are wondering if this is the new normal.